In this video, I'm going to go over the best ETFs and index funds to buy in 2020. I'll also show you what to look for when buying an ETF to make sure that you aren't being charged too much for the upkeep of the fund. And stick around to the end of the video and I'll show you an ETF that has grown by 42% in the last year. Hi, I'm Jeremy Zargami, and welcome to my channel. Today I'm going to show you the top ETFs and index funds that I'm investing in. But if you haven't already, please click that like button. It greatly helps out this video for the YouTube algorithm and helps more people see this content. And please consider subscribing if the topics of investing in stocks, real estate, and personal finance interest you. Let's get into it. First up on the list is the Vanguard S&P 500 ETF, ticker symbol VOO. Or VOO. VOO tracks a market cap weighted index of US large and mid cap stocks. Basically what that means is that VOO tracks closely with the S&P 500, which is the top 500 companies in the US. VOO has a market cap of $159 billion, which is a very big market cap for an ETF. VOO has an expense ratio of 0.03%. That means for every $10,000 that you invest, you have to pay 30 cents per year to own this fund. That is extremely cheap when it comes to ETFs and index funds. It has a dividend yield of 1.75%. This will help you make a little bit of income off the stock each quarter. The quarterly income can be used to reinvest, or you can spend it however you like. I would recommend reinvesting it so you can take advantage of compounding. I like this stock because it's very diversified, which doesn't make it as volatile as if you were to buy an individual company's stock. VOO is the perfect ETF for beginners to buy into as well. Warren Buffett actually suggests for most investors just to invest in an ETF or an index fund that tracks the S&P 500. Next on the list is the Vanguard High Dividend Yield ETF, ticker symbol VIM or VYM. VIM tracks the FTSE High Dividend Yield Index. The index selects high dividend yielding US companies, excluding REITs, and weighs them by market cap. VIM has a market cap of $26 billion, so it's a significantly smaller fund than VOO. VIM has a very nice dividend at 3.48%. This is a solid dividend yield for someone looking to get into dividend investing. Some of the top holdings in this fund are Johnson & Johnson, Procter & Gamble, and JP Morgan Chase. VIM has an expense ratio of 0.06%. So for every $10,000 that you invest, you would pay 60 cents per year to own this fund. The next ETF on my list is the PowerShares S&P 500 Low Volatility High Dividend Yield ETF, ticker symbol SPID or SPHD. SPID tracks a dividend yield weighted index comprising of the 50 least volatile names chosen from a short list of the S&P 500's 75 highest dividend yielding securities. It's good for beginners because it's not very volatile. As a new investor, volatility makes people panic sell, and buying into this ETF minimizes the risk for that happening. This fund has a market cap of $2.34 billion. This is a very small market cap compared to the previous companies. But not to worry, just because it's a small market cap doesn't mean it's a worse or better investment. It usually just means that there's less stocks within this ETF compared to maybe VOO that has about 500 stocks in it. So SPID has about 50 stocks in it and VOO has 500. So it makes sense that the market caps are different. So don't be too freaked out by that. I'm just pointing it out just so you know. What I love about this ETF is that it pays out a healthy dividend of 5.43%. It also pays out its dividend monthly, which is really great. The only thing I don't like about this ETF is the expense ratio. The expense ratio is 0.3%. This is drastically higher than the rest of the ETFs that I've shown you today. But that being said, I still believe that it's worth it based on the dividend yield that it has. Some of SPID's holdings are Lumen Technologies, Altria Group, Philip Morris International, and AT&T. This is a great ETF to add to your buy list. And last but not least on the list is PowerShares QQQ. QQQ tracks a modified market cap weighted index of 100 NASDAQ listed stocks. QQQ is heavily weighted in the tech sector and is an ETF that's focused on growth. It has an expense ratio of 0.2%, so it's slightly cheaper than SPID. QQQ has a dividend yield of 0.61%, which is pretty low, but it makes up for it in growth. If you feel like you want to invest in the tech sector, but you don't know which tech company to invest in, you can buy into QQQ and instantly own hundreds of companies in the tech sector. Some of the top holdings are Apple, Microsoft, Amazon, Facebook, Tesla, and Google. This gives you great exposure to some of the biggest tech companies on the planet. To me, this ETF is a buy and hold for 30 years type of ETF because just the way that technology is changing, and I feel like investing in it now, 30 years from now, where these companies are going to be at, their market cap is going to be multiple $trillion and the stock's going to be way higher than it is now. So just investing in this ETF right now and watching it grow over the next 30 years is going to be pretty crazy. I feel like you could retire pretty nicely off of the growth of it and maybe transfer it over into like maybe a dividend ETF after when you're ready to retire. But just the growth from these companies over the next 30 years is going to be insane. So that's why I really like this ETF. QQQ has shot up 42.56% year to date. That's an insane amount for an ETF. This is what growth ETFs like QQQ are capable of. I hope you got value from this video. Don't forget to hit that like and subscribe button down below. It greatly helps out this channel. Those likes, comments, and subscribes are everything to me. So thank you so much. Please comment down below with any questions or feedback. I would love to hear from you all. Be sure to follow me on Instagram. I post there almost daily. Also, don't forget your 2 free stocks down below. You get 1 free stock when you sign up with Webull. When you deposit $100 onto the platform, you can get a free stock valued up to $1,600. And you get a free stock when you sign up with Robinhood. Use the links below. Also, M1 Finance is giving $20 to each person who deposits $100 onto the platform and signs up with a new account. And you can always just take that money and deposit it back into your account. So if you want a free $20, use the link below, deposit $100 onto the platform, and you're welcome. Thank you so much for watching, and God bless.